Hey guys, Darren here. Thanks for joining the Stock Option Market Weekly Update for the week of May 13th, 2024. We're going to talk about where we are in the S&P 500 year to date, the different sectors and how they've performed year to date, and what it looks like moving forward. We're going to touch on interest rates, and then we're going to jump into the option trades on the option trading platform. Before we get started, if you appreciate the time and effort that goes into making these videos, if you can do me a huge favor, hit that like and subscribe button down below. It really helps the channel. It gets it out to more people, and I appreciate it, so thank you very much. I think it's super important that we understand the different strategies and tools that the rich are using to get richer. Then we can use those same tools and strategies to profit for ourselves in any market. Be sure and download the free options workshop in the link below. It talks about the two main benefits of trading options over buying stocks. There's also a paid course as well if you want to dig in deeper to the options. Disclaimer, I'm not a financial planner and I'm not recommending trades. Please do your own research, and if you're new or learning options, I recommend you start small. All right, guys, let's see where we are in the market today. We started the week at 51.28 and we ended up on the S&P 500 at 52.22. So pretty good little gain, 1.8% last week. We're up around 9.5% year to date. We started the year at 47.43. The forward PE ratio is now 20.4, so it is above the 10-year average of 17.8. And on the economic calendar this week, we've got core PPI coming out on Tuesday morning at 8:30. 0.2% is the forecast and what we're expecting. And then we've got CPI numbers, 0.3 is expected coming out on Wednesday. If we take a look at interest rates, the first rate cut, there's a 48% chance in September of a rate cut. In July, if we look there, you can see it's still expected to stay at 5.25 to 5.5. And the minute that it gets a little higher, higher percentage, 48% versus 38% percentage point that it stays at 5.25 to 5.5, and then it would probably move to November. Looking at the FactSet Earnings Insight Report, we can see that 12-month PE right here of 20.4, but we can see earnings growth year over year of 5.4% in Q1 for the earnings this year. So it's actually been a pretty good earnings so far. And now if we move on to the second quarter, we've got earnings growth expected of 9.3% and revenue growth of 4.6%. And then throughout the entire year this year, calendar year 2024, we've got 11.1% on earnings growth and revenue growth of 5%. And then moving into 2025, 14% and 5.8%. So things are looking up for earnings moving forward. The different sectors last week on the 5-day, everything was pretty much up. Utilities were up the biggest, followed by, looks like, financials. And then year to date, everything's up except real estate is down 5%. The fear and greed index is at 48, so pretty neutral at this stage. So let's move into the trades. First one that we're going to look at is oil, and this one I took a shot. There was tensions heating up in the Middle East, so I lost on that. I'm just letting it run out. The chances of a move from 78 up to 85 by the end of next week are not real good. So, but hey, it's already a big loser, so I'm just going to hang on to it. Airbnb, I'm actually putting on another tranche right here of Airbnb. It's at 146 IV rank. So with earnings coming out, there's a big earnings crush after earnings come out. So you can see that. So selling premium before earnings is good, but after earnings, it's tough right now to sell premium with the IBRs that are so low. But they did beat on the top and bottom lines, but they guided lower. And Airbnb is, in my opinion, a great company. This is the annual chart, and you can see the drop down to 146. So I'm definitely staying long with my put spreads. but I'm actually still in the clear right here. If you look at the curve mode and analyst tab, and we're still profitable down to, just above 142.5. But I'm going to put on another tranche because it's a great company. They've got $4.2 billion in free cash flow with 41% margin. So it's huge. And their active listings grew 15% compared to a year ago quarter. So I thought the earnings was great, but because they got it lower, it got hit. But hey, that's an opportunity in my mind. It's an incredibly well-run business. My target is 170 over the next year for Airbnb. So I'm definitely putting on another tranche. I'm going $5 wide and looking to collect, basically a third the width of the strike. Um, so somewhere between the 183 and $2, or which is $183 or $200. AMD also been hit pretty hard this year. The AI stocks are out of favor. You can see the 13 below the 50-day moving average trending down, but to me, the AI stocks have been hit. I don't see much further risk in it moving down. I'm actually still in the clear. 140 is my short put, so we're profitable above 140, and I'm staying long AMD. Probably not adding anymore. The IVR is not super high right now at 23, and let's see, earnings on AMD. Yeah, it's already come out. But I'm staying long AMD, and they actually reported it looks like on April 30th, and they were in line. But again, the stock got hit. Amazon, incredible business. They're dominant. Ivy rank is very low. Um, they had earnings. They beat on the top and bottom. I've got a small put credit spread, and we've I think we made money in the last 30 days. Yeah, $185 in the last 30 days just trading the put spread. But it is up right now, trending up. My target for Amazon, actually, I've got to look at that, the long-term target. I think it's around 200, so we're just under it. But I think they're dominant players moving forward. DraftKings has been great. DraftKings is at 43 IVR drop because they did come out with earnings and they missed on revenue and the stock dropped, but it is steady. We've got the poor man's covered call on, so a deep in the money call at 30 and then selling 47 calls against it. And we've done well in the stock. 30. Oh, I actually sold and I moved out this call. So there is a realized profit there that's pretty big, but we've made over 3,000 in DraftKings. So it's paid for the deep in the money call outright, just selling calls against it. But I think DraftKings is dominant. It trades in that range. It's been pretty steady, just a steady trend up. So I really like trading DraftKings with the poor man's covered call. My target is $50, so I see it moving up. GDXJ is the gold miners ETF, and I put on a $3 wide iron condor. So we are profitable. We're right in the middle of it. Collected on $3 wide. I think we collected $100. Yeah, a dollar. So that's $100 since one option contract controls 100 shares of stock. So we go $3 wide, so our risk is 300. We collect 100 as long as it stays in between that range by the expiration date. I like to go 30 to 45 days out to expiration. So IVR is high in gold. That's why I did it with gold up right now. I'm hoping it stays in that range, but when gold's a little different. Most stocks, when they move up, IV rank moves down. But with gold, when it moves up, IV rank tends to move up. Same thing with GLD. It's gold as well. Did a $5 wide. This time collected $2, so or $1.68. So basically, again, 1/3 the width of the strike, and it's profitable in between that range. We're right in the middle right now. Same. Yep, same move up on the chart. Google, I think they're a dominant player. Stock's at 168, and you can see the stock price up here and the IV rank right here. So 168, IV rank is 32. This is the Tasty Trade platform. There's a link down below if you like it. Also, Moomoo is great. It's free commission trades. Tasty Trade is, I think, $1 per trade. So not real expensive, but not free. Google, 160, dominant player. They've been moving up. And with Google, let's see what I've got. I think in the last 30 days, we've done pretty well. Let's see. Yeah, $834 just in the last 30 days trading Google. So I've taken some profits, and they beat earnings on the 25th of April, both top and bottom lines. My target is 180 to 200 for Google, so I think it's going to continue to do well. LIII Harris has done really well consistently throughout the year. Just in the last 30 days, $421, and I think in the last 6 months, yeah, $1,642. So we've done really well just doing put spreads. I actually added on $10 wide because the stock was up late last week. I think it was Friday. So I do like to normally trade both sides, but I threw on a call credit spread with the big move up, thinking that it might return back down, and you can see the big move up right here. That's when I threw on the call credit spread to trade both sides. So we'll see how that works out, but just collect more premium. Let's see what I collected when I did that. When I did the call credit spread, I collected $270. So I'm already down $60 on it, but hey, I'll make money on the put. And worst case, I close out and roll out to next month. I still like LIII up to a 240 target. So I expect it to continue to do well, especially with the wars in the Middle East. They've got a lot of different products that are great for today's military. Netflix has done really well for us over the last couple of years. Let's see. In the last year, yeah, almost $3,000 in Netflix, and we are right in the middle of the range right here. I've got two iron condors on $10 wide, $626 to collect in premium should it stay in between those ranges by the June expiration, 41 days out. So I like Netflix. They actually guided lower for Q2, so there was a drop, and that's when I put it on. So I put it on down here, the second tranche of the iron condor, and it already moved back up, making up ground. But I like Netflix. My target for Netflix is right about where it is now at 710. So iron condor is probably a good place to be. ServiceNow, great cloud company. These guys do, it's a cloud services company, and they do language models that help businesses, especially banking. And they've got a few other government sectors, but they help them to be, to increase profits. So they help them definitely make more money, and they've had a profound impact. My target for ServiceNow is 800. We're in the range. I'm profitable all the way down to 635 up to 775. You can see here in the green. As long as we stay below 755, I make a lot more money. But you can see, yeah, we've got almost $1,000 in premium that we can collect as long as it stays in that range within the next 41 days. NVIDIA, we're up on this trade. It's a $10 wide iron condor. We've got a lot of room to move too. It looks like, wow, it's already way up to 898. So I stayed long and did a put spread when the AI stocks got hit, and NVIDIA's the leader, and they've got earnings coming up on May 22nd though, so we've got to watch out for that. The price is high, but actually the PEG ratio, the price to earnings to growth, is fairly valued, I think. And AI again took a hit, so I'm long. Path, UiPath, another software company. It's a high flying tech. They do software for robotic process automation, which is a no-brainer. I think that sector, robots, process automation, that's growing like crazy. So on a down day, I did a LIII option, and then I sell the call against it for a poor man's covered call. And it's got earnings coming out on May 29th. Um, Palantir, they had earnings. Gosh, they got hurt again, but I think they're at a low. You can see IVR is really low, but stock's at 20. I don't think it can go too far below that, but you can see the drop last week. But we've done pretty decent in Palantir, 240 bucks over the last 30 days and 550. But I like Palantir going forward. Um, they've got great numbers. I think with the earnings, they said the commercial numbers in Europe and Europe in general has been slower. So that's kind of what, even though the numbers are tremendous, you can never live up to the expectations, of the analyst. But SoFi as well has been hit. They are at 6.94. I don't think they can go much lower. I think they're going to continue to do well. They're saying there's more competition, and they were profitable again, but the guidance was not as strong as was expected. So I'm going to stay along with my LIII options. Square, I'm in a put spread, not profitable just yet, so I'm waiting for that to move up. And I like Square. I think they're in a great sector, and I'm going to stay long Square. They're at 71. IVR is rather low at 11, but I've got a $5 a $5 wide put spread on the Square. Yeah. TLT and TMF, they have not, the bond funds, I'm waiting for interest rate cuts. That's when they're going to do well. So I'm not going to talk about them too much, but they're down. They're not going to do well until about 90 days before those interest rate cuts, which we saw maybe coming in September. So that's the plan there. Verizon, I've got 100 shares of stock and I've sold a 41 call against it. It continues to just kind of be a cash cow. It makes that 6% dividend, and then I collect on the call against it as well. So that's kind of the strategy there with Verizon. It's continued to do really well. And ExxonMobil, it's way up. Yeah, 118. We've got a 115, 100 put spread. We've already made $105 on that. I know we've done really well year to date. Actually, just in the last 30 days, we've made over $300. But I'm going to stay long ExxonMobil, and my target is about $130 for ExxonMobil moving forward. All right, guys, I put a link down below for that free options workshop. Be sure and grab that. Join Moomoo. Get your free stocks, your cash back on your deposits, and zero commission trades. Leave a comment. Let me know what you're trading. Really appreciate it. Remember to hit like and subscribe. Share the video with a friend. Thanks for watching. I'll see you in the next one.